Today we saw, every day we see breaks. That was interesting.
Yeah, well, and then at 7:20, right out of the opening range,
Yeah.
they went right for a gap fill in the pit, and they got it in
I know.
3-4 minutes. So, does that tell you we're not running the show?
No, we're not. The grains are going to get interesting today, I think.
Yeah, well, they look really good.
Yeah, they do. Let's see if we get any action in the green stocks today. See if anybody's playing it over and bleeding it over into that section. Let's see.
Bundy's up a little bit.
Yeah, it's nothing. Although, if it takes out, it's been struggling at this area, the $47.50 area. So let's see what happens here.
Bill, Canada's right at the 200-week moving average.
Oh, yeah. Good point.
So, I'm kind of looking at that to see, and Ira he'll chime in too. I mean, that's going to be one of your signals for, I think, more commodity strength.
And you know what? It's really hard being long Canada because I'm a Justin Trudeau. He's weak in a lot of ways, and the fact that he just Krista Friedland, who I don't know. I have your call to be a FT journalist or editor. I don't know. It's a big position. It's a big position, but she didn't do a bad job as a trade representative, especially when she was up against Lighthouse. But I think that says a lot for her. You know what? Rather than trying to go head to head with Lighthizer, I should say, she worked with him rather than trying to upstage him. And that's the difference between having a female who finesse the situation more than a male who looked to pound chest and almost make it look like some big bulls on the savannah. Let's see. With the cat, with good point. I forgot that we're right on it. Yeah.
Yeah, it's right on it. So it's really hard to get a good read. And
yeah, very good point.
And you're just not seeing anything in the futures here.
Yeah.
All right, let's just go back to this other thing here because I just want to go over these longer term charts with everybody. That's the top of the channel for the year's low in the S&Ps right up here at 24. So you can't be long. You can trade individual names off their own technicals up here, but basically, you're looking for gap fills. You already got the apple out of the opening range of the downside. You're going to, at some point, you're going to see 33.96 or 97 again in the S&Ps this week. Whether they do it today, they do it Wednesday or Thursday, I've got no clue. But don't buy strength. So that's one thing I'm looking at. So that's basically completed its whole swing in the S&Ps. Now the question is, here's NASDAQ bonds, okay? It just completed the short swing. This is the extension from the 2000 the 2000 high to the 2002 low. So there are higher targets. It's just a matter of which one it wants to follow. So that's kind of what I'm looking at right now, is how we're going to move from A to B. And it's only a couple of names again. You know, it's Amazon, opened steady and took off, so there's no gap. Visa did the same thing. Apple's coming down for a gap fill. A lot of people were long up to yin yang and that thing going home. You know, Cal told us late Friday, everybody was buying 500 calls for today. So they all got rewarded big time. So thanks for, you know, giving us a heads up on that. The opening range of the SPOOs is 20.5. So basically that's your risk to be short here. Really, it's 24 closed right now. Facebook, you know, Amazon, you get in the names, trade them off their names. You know, you got all this stuff trying to come back for gap fills. There's the corn. Ira, have you looked at any of the bond rolls yet?
No, I really haven't been trading them, so I haven't looked at them.
Okay, well, I'll do that over the weekend.
Yeah, I'm trading the Europeans. I'm not trading the U.S. You know, there's just, to me, nothing there. You know, back boom, 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 boom. And, you know, now, well, they might get interesting this week because of the, it's Powell speaking at 8:10 on Thursday. I think the market had a sense that he might, that's why the dollar came off. We're back to the yield curve discussion because, again, the news out of Europe over the weekend, you know, their coronavirus outbreaks spiked pretty dramatically, and didn't see anything else. But again, it's the end of their holiday period, so whatever.
Well,
I'm not.
But all the European debt rolls on the 8th, Ira.
Okay. Yeah. Well, that's when it expires. So yes.
Yeah. It rolls this week. Everything starts rolling.
But again, you know, there's so little trade. There's more trade in the European debt markets, of course, as people seek out some yield plays. Here I'm looking at right now where the German Italian is back over 140, is back at 143 differential on the 10. I'm citing the 10-year because that's where you build the synthetic baskets anyway.
Yeah, here they got all the cattle, all the meats are lower. Lumber, you know, is getting close to that $9 target. Doesn't have a lot to go. Andrew's in too. He just joined us. Andrew, I was looking at the spreads this morning.
Good morning.
I'll take you back to this page real quick. That's the top of the channel from the bottom of the break in the S&Ps right there.
Yeah. No, I was here watching that. Thank you.
Yeah, and then the question is, which swing are we following in the NASDAQ bonds?
Yeah.
This is the this is the swing from 2000 to 2002, the extensions, and this is the short one from this year. Thanks, Cal. So, you know, I'm just kind of looking at the spreads to see what they're going to do. You know, we're right at the edge of the cloud here on the weekly and the SPOO bonds. So I don't know what to do with that. And the gold, guys, I think you just use I just think you use the old high. At 1924.5.
And the bank stocks continue on to be absolutely crap.
Yeah, nobody wants them, right? Yeah, Goldman, that can't keep going anywhere.
You know what? It's again until they get some clarity about what the Fed plans on yield curve control or what else is in their toolbox. By the way, there is a great piece, and I say it's short but right to the point by Chris Whalen overnight.
Technology.
I mean, do you expect anything from him on Thursday in that regard, Ira?
Well, you know, Andrew, that's a very good question, especially after the way I believe, you know, and that's my analysis, is Powell, you know, the way the minutes were crafted, the FOMC minutes were crafted to pull back a little bit. So now you got the equity markets, you know, ripping. The dollar is kind of stabilized in here. Although if I read one more article talking about, oh, you know, the replacement of the dollar, but how does anybody draw that analysis out? Okay, only the idiot media, of course, idiots. You know, I'll tell you what, I'll put zero hedge right in there because they like to use the high that was made in a panic high on the dollar rally in March. But as in the way that I look at technicals, and I believe that Judd will look at it the same way. If I look at it on a year-on-year change, the dollar is up about 1.5% to 2% on the year. It's not even worth a page 12 piece, by the way, but everybody uses the highs, okay? I find it kind of reprehensible and irresponsible, even more so. And if I look at the low that was made prior to that spike rally, the dollar is down about 1.5%. So we've gone nowhere. I don't even know why people are meant. And I think I was one of the first dollar bears out there. Again, going back to May, where I sensed that there was a change. This is a nothing story. This again, I'm looking for a move, just like we're talking about the Canadian 200 week. I'm looking for a move on the to the euro to the 200 month. Now, can that get upset by things in Europe? Absolutely, but I still think that the drive towards negative yields in the U.S. is the most underlying catalyst to a weaker dollar. Now, I can easily be proved wrong here, and I'll know where I'm wrong, and that's why I'm trading it. I don't need it.
Oh, this is what the three of us know, and the rest of those imbeciles don't know. That they don't ever use the fibs from the Plaza Court. And you can see it.
That's a big story, but I'm just talking about they don't have any real context. They print these, and then when the dollar continues lower, people go, oh, it's ridiculous. It's
but you need them to make money though. So.
Yeah, I know, and I read.
I mean, I'm just looking at your comments last week, and I remain a little cautious on the opening information today, on the basis that if they're expecting something on Thursday, then interesting. Because not that I'm suggesting that the dollar's finished going down, but there were reversals in the euro last week lower against 1999's high, including the Kiwi, including the dollar Swiss and dollar Sim and the Aussie. Not outright, but they were lower on the week after making a new high. So yeah, I don't know.
Acknowledged.
Pretty. I mean, and I'm looking at Apple now. You know, Apple's vol's gone from 38 to 56, and Russell, as you pointed out there, Ira, which is a big weighting of financials, it's starting to look, not particularly happy either. So.
Yeah, I suggest everybody try to get a hold of Chris Whalen's piece. I'm sure it'll be out there. He makes his stuff pretty available. Today's piece, he's got a very good piece on velocity of money. Very easy to understand too.
What was the name of the article? Sorry.
It's Chris Whalen from the International Risk Analytics, and the title of the article is Payments, Money Velocity, and Bunk.
Thank you. Good
Piece, makes you think, and it's a very short read. Of course, most people are too lazy to ever read it. But, I go back to what I finished with on podcast with Ritholtz and Rosenberg. And I've said this many times, the yen has to take the lead here if the dollar sell-off is going to be sustained.
Yeah, and that's just parked. At least right now.
Acknowledge.
I hear the corn's starting to get a bid.
Yeah, and let me just follow up. Going back to, if you look at the yen, don't look. But if I ask, let's poll this room. What do you think the Nikkei is on the year?
Anybody?
No cheating.
Okay, cheat. I think it's up. But... Which
Acknowledge.
the strong end's done a good job.
Well, it's really, so if I'll ask you the same thing. What do you think the yen is on the year?
Yeah, I mean, it's still lower on the year. It's amazing, and that's why am I not getting the right chart?
Dollar yen is about 2% lower on the year, 2.5%, and the Nikkei is lower on the year. So they're still playing with that correlation.
And the Nikkei is basically half of the life of the futures. It's right there.
Yeah.
This 23,000 level is half of the life of the Nikkei.
But I mean, it's for the year, it's still lower. While the S&Ps are up around 6% for the year.
Yeah.
So they're still they still have this symbiotic relationship with the yen. It's the risk, but if it's the risk and then the risk on. So we buy dollar yen, or at least we don't do anything with it, and because dollar yen is just sitting here, okay. I just, at what point, I'm waiting for that relationship to break down somewhat, and that'll come from the yen. The yen really needs to be, and I'll say it over and over again, on a real return basis. I get a better, if I'm a Japanese investor, I get a far better real yield being in yen than I do being in euros, And of course, it all depends what I'm investing. If I'm taking my yen, converting them to euros and buying DAX, it always depends. But just on an interest rate vehicle, on a bond or something, I get a better return in Japan. I can't. My nominal yield on a goddamn 30-year may be 1.4%, but my real yield is zero, and that's if I'm going on 30 years. If I'm buying 5 years, I'm probably at negative 1%, 1.2%. So,
Yeah. Ira, take a look at this. That spoon NASDAQ, it's trading right at the breakdown level from July 2012.
wow. Yeah, that's. So this is where it's sitting. I'm just gonna, as usual, I'm gonna be patient and wait for it to happen. But if you're buying nominal yields these aren't yields at 5 and 6%, by the way. These are nominal yields of nothing. And the yen's been pretty steady. But if I asked you over the last 5, 6 years, what currency has really performed phenomenally well and gives me a yield of, let me see, I gotta go chase this down, and it's paid an above, let's see if I can, oh yeah, there it is. I mean, this currency has been an actually wonderful place to park your money in, and I'm pissed at myself because I didn't.
What are we looking at?
Do it, but I bought a few and never did more than that. The Israeli shekel, believe it or not. I don't know whether you get the cash on it, Judd.
Yeah, I do. What's the symbol?
It's IUSD ILS.
Here, if I could type, I can pull it up.
Yeah, I know.
Oh, come on. Huh. Hold on. I've got the CQGFX. I don't know why I'm not pulling it up. I'm not typing it in properly.
IUSD ISL. I can give you the futures too, which are an IMM product, so you should be able to get that.
Well,
3.401.
Yeah, and
I keep typing RL. ISL.
No, I on my CQG system that Stan does so well, put it into shape.
Okay.
USD ILS.
Right, that's what I told him.
No,
Stan.
you're right, Ira. I'm just telling Judd.
Yeah, I can't type it, and I keep trying to do it with an I.
I did. Went right in.
Well,
Oh, your keyboard must have been made in the West Bank.
yeah, it was. Yeah, exactly. They don't want me to have anything to do with it. Oh gosh. Hold on, I'll get it. I don't know why. It's just not giving me any love here. There it is. I just changed that chart.
You see that everything spiked. You want to see the dollar shortage reflect itself? All you do is have to look at that March spike there.
Yeah, right to the 200-month moving average. Look at that.
And I'm telling you, I was playing golf with a guy. I don't think you know him. He's good friends with Barry on that day because we could only through all the golf courses basically are closed unless you walked and carried your clubs with no carts, no nothing. That was back in March in Arizona. And he turns to me and he says, "Hey, you know, my kid, on that day, I can tell you it was 385. He says, my kid lives in Israel and wants to buy a business and he's got dollars to convert. He said, should he do it? I said, now, call now. This is the best opportunity he's going to have." Good friend of Barry's. Right? You probably know him, but I'm not going to say his name. He turned to me and then he called me later. He says, yeah, he did it. I said, yeah. Okay, if he's wrong, it's going to cost him 10, 12%. But what's the difference? He just got to, you know, something when it comes to foreign currency trades, they sometimes will give you opportunities to buy things, especially in a structural way, meaning a business or even debt instruments where you catch a spike like that and you have to take advantage of it. And if you're wrong, well, you're getting a better price than you ever dreamed of anyway.
Look at this on the yearly.
It's
Putting in an ORL year. I mean, that's strong shekel. That's a big deal coming into the fourth quarter.
It's truly been for 4 or 5 years. And there was one guy, in fact, he passed away. Jerry Thal called me and said, "What should I do with my money?" I said, "You know, if I were you," he says, "No, you're kidding me." I said, no, I'm serious. You know, because I said, yeah, and that was like 9 years ago. So it's just been a rock. It's just been holding in here, and people don't realize that.
We're going to go down to this 08 low or 08 high.
You know what? You got to be careful because the Bank of Israel is always around intervening if they view the currency as too big a threat to the economy. So it's not going to be easy, but I'm amazed at how it sustains itself. And that was long before the UAE. So when you think that people don't know what's going on, besides the friggin' headlines.
Well, I was just glad we got some information out of Michael about the grains and what was really going on in China.
Yeah, that was really important. So let's see if we can get a boost out of here.
All right, so right now we're going to need, I don't know.
Going back to Andrew's question, the interesting thing about Thursday is really yield curve control and see what Powell does with it. Again, especially with equity levels so elevated, they have to be so careful. Trillion. Now he's measuring money supply versus GDP. Okay, let me preface it. So he concludes by saying this: when the Fed purchased a couple trillion in treasuries and MBS, mortgage-backed securities, the M, meaning money supply, showed up in the accounts of dealers and investors. Spending was and is maxed out. Only the investor class has savings. Everybody else spends everything and they get their income from their labor and government transfer payments. So GDP can never increase enough to keep up with money supply when the central bank surges money supply. Where all that excess M showed up, of course, was in the upward pressure on the prices of financial assets.
And there it is.
And he's using, there's a Fred from the St. Louis Federal Reserve Bank, where they measure total checkable deposits and total savings deposits. Then there's assets, total assets, which are, of course, on the rise, and then money stock. So this was a very interesting piece. I mean, he is so definitive about that. And yet there's so many people say that this rally has nothing to do with what the Fed has done. You know, there are a lot of Wall Street analysts out there who maintain that. I find it a very weak argument, but you know, okay, that's fine. And if I'm an investor, invested, and especially fully invested, I'm going to quote Scarlett O'Hara. Frankly, I don't give a damn where it comes from. It's just powering it, you know. And you can argue the academics and the soothsayers on Wall Street can argue all they want, but the market just keeps going up.
Yeah, so you're seeing this, you're seeing the, you know, the Dow gaining on the NASDAQ, which is important.